Alright guys, little change in scenery here. You can see my beautiful face is now in the mix. Let me reduce this. So today's video, we'll be talking about something that a model that I've been testing, and also something that a lot of traders just don't really understand as a whole is time, right? A lot of you may think of quarterly theory. Oh, you might think of digital time theory. You might think of a lot of this stuff, but in reality, you're overcomplicating time. Time, as I've been preaching on this channel, is just the divisions of time. And each specific division of time has its own kind of uniqueness in how it plays out in price action. So normally, usually what we want to see when we are understanding time is we are talking about divisions of time, right? We're talking about days of the week, we're talking about weeks of the month, and we're talking about months of the year, and specifically quarters, specifically the actual quarters, like the year split up into 4 3-month quarters is what I'm saying. So out of those 12 months, you have 4 3-month cycles that happen. Okay, that is your quarter. So essentially with this model, there's some things you want to understand about it. There's some rules to it. There's some rules to this model and kind of what we want to look for when we're trading this model. Essentially, the first thing we need to identify is economic calendar, as always. So economic calendar is very, very important. So economic calendar is always the first thing we identify when we're trading this model, right? Do we have news at 9:20? Do we have news at 8:30? Do we have news at 10 o'clock? Do we have news at 2 p.m.? Is it FOMC? Is there a lot of economic data? Maybe dollars getting weak. That's something that we should look at, right? Establishing this strategy does not work without narrative, right? If I were to tell you straight up that the strategy is just the sweep of an 8 o'clock candle at 9 o'clock, and you can somehow miraculously catch anywhere from 100 to 200 points, you'd be like, okay, that's easy, I can do that. But what you don't understand is you need to be selective about the days that you do it, because it does not always happen every single day. Some examples is, if you'll notice, it doesn't happen on no news Mondays. So when we have Monday accumulation on today, it doesn't happen on those days. The highest probability days where I see this model form, or it will most likely form, is on a Tuesday or on a Thursday. Yes, it forms pretty much every single day, but is it always going to be the same way to catch? No. And by all means, it's not going to be this. You're not going to catch it the same every single day. So here we have the weekly candle. And a couple things I'll preface about this weekly candle is that, yes, it was very kind of choppy, very restrictive within the first 3 days of it. And of course, like last week, we had seen a big run up during Asia from about 8:30 p.m. Big run up during Asia, right? So right here again, you can see 4 o'clock. That's the Wednesday close. 6, 7, 8, 8 o'clock p.m., 9 o'clock, 9:30, boom, boom, boom. All this run up of liquidity, right? What is that telling you when we look back to the economic calendar, right? The economic calendar is always first, right? If I were to put on just your basic 2 degrees news, live economic calendar by 2 degrees, and let's say I only had it at red folder news, only for USD, and show the table. All right. What you'll notice is that a lot of these news drivers are not as prevalent as we want to see when we have them later in the month. So when we have them later, I mean Fed Chair Powell speaking on a Thursday, right? We have GDP, we have unemployment claims today, we have GDP, which is important to understand after. These are economic signatures that you want to see after a rate cut. So when we cut interest rates back here in Wednesday, it's caused a big run up with a lot of failure swings, a lot of liquidity being built up, people anticipating that the market will run higher. And so it did, right? It did run higher. And that is what we wanted to see this week in order to lay the foundation of a potential sell model that comes later in the year. So economic calendar, like I said, is the first thing that you must understand. Second, you must understand daily profiles. Like I said, this is not a pattern. You cannot trade this model simply blind and just wait for the sweep of every 8 o'clock high or every 8 o'clock low. There are certain elements as to why it works, right? So for daily profiles, you can see we have an Asia accumulation, and accumulation is not just one, unidirectional sided price action where we just have chop, just going up and down like here. This is considered accumulation, but this is also considered accumulation, because I want you to think about what people are doing as they think the market's going to go up tomorrow in New York, so they are buying, right? Institutions are buying up here, but at the same time, we also have a lot of retail investors who are also kind of buying. So this accumulation upwards is generating interest, generating liquidity upwards, low resistance liquidity run. If we go in a lower time frame, you can see here that we have no significant lows being printed. So what does that tell us about New York session? Well, like I said, each session has its respective element to it. Let's just replay this back to the daily candle. We can see here that London session has created a big range, right? This is important to note when we are looking for some kind of London accumulation into a New York manipulation and then distribution back down to our smooth bodies, Asia lows, this low right here, this low right here, any of these lows, midnight open. This is very important when understanding the daily profiles of, how you can use this 9 o'clock, because most of the time, if we're expecting a one-sided news delivery, 9 o'clock will be the high of day or will be the low of day. It might be high of week, it might be low of week. Right now, it's very possible that we get a high of week profile with the Fed, with Powell's speaking right here. So very likely is it that if we revisit these highs, then it's not ideal for me, considering that we're at a very key area, especially in time, right? So we do have news on Friday. So obviously we will be trading on Friday because this model does work best with high impact news, so such as red folder. So that is important. So what is the third aspect of this model? What is the third thing we are almost always looking for? We are almost always looking for a range to be created, specifically within the 6 to 8 o'clock 2-hour candle. So what do I mean by this? I mean, if we visualize the daily candle, or not even a daily candle, so we visualize the 6 a.m. to 10 a.m. 4-hour candle, right? You have your open, you have your accumulation, you have your manipulation, and then you have your distribution, and then you have your close at around 10 o'clock, right? So if we look at this if we visualize the power of 3, we can see here, this is our open, and this is our close. It does not matter about the wicks. I don't care about the wicks. Right? I don't care about the wicks. The wicks don't do much. The bodies are the ones what show us what price action really is doing. So a range to be created specifically within the 6 to 8 o'clock 2-hour candle. So what do I mean by this? Is this CRT? No, this is not CRT. This is something that has been specifically here for longer than fucking Romeo. So this is not CRT by any means. But what do I mean by that? Let's say for a day like this, and I will show the trade that I took today as well on the screen. You'll see it right now. We have our start of the 6 o'clock candle. Now let's visualize. Let's take a step back, and let's visualize this power of 3 in development. Let's just take a step back and visualize it. All right, I'm going to turn off my indicators. And yes, I know this is hindsight price action. I do understand that. Let's say we visualize the 6-hour PO3. All right. In order to visualize this, what we will need, since we don't have anything to work off from London, unless you want to consider this as valid, right? What we don't have to work off yet is we have equal highs, and we also have a very little to open at the 6 o'clock candle, right? So let's say we're measuring the previous range, so from the 2-hour candle, so from 2 a.m. to 6 a.m. So this 4-hour candle right here. Let's say we are measuring this manipulation leg down here before the run up. All right. Let's say we are targeting the -2, -2.5. How we want to visualize this candle opening, and I will pull up a PO3 indicator, high time frame power of 3, and we will set it to the 4-hour candle. All right, so I want you to visualize, if we have established that the economic calendar is highly favorable today, and we also have established that London session and Asian session has made a run higher, a high resistance liquidity run, then what do we expect for New York? New York either is one of two things. If there's no news, we expect chop. If there's high impact news, then we will expect price to manipulate London session and distribute. Now, what's so special about this is I want you to visualize the PO3, all right? I want you to visualize if this candle is bearish, if we expect this candle to be bearish, considering we wake up, let's say it is, say it's 7:30. Most of you will wake up at 8 o'clock. If you're really, really on that grind, you'll wake up at around 7:15, which is the time that I woke up today. And you'll understand that, okay, I see all this liquidity. That means I'm bearish for today. Where are we? Are we in a high time frame PD rate? That's also another very important thing, but it's not as needed, right? You can see we are in a daily SIBI. We have sweeped price at a daily SIBI, right? That is also very important to understand. So let's say we are continuing to visualize this PO3. All right, we understand looking at the economic calendar that we had news at 8:30, right? So what will 8:30 be? How do we know what way 8:30 will be? The question is we don't. The question is we don't care what move 8:30 does because we only care what happens after it. So I'm going to play a few candles. All right. You're going to see still some choppiness, a dip below the open. Okay, so inducement one more time, right? Before news, right? Continue. All right. Now you see here 8:30. 8:30 delivers a one-sided candle with a large wick on both sides, right? But it's bullish at the end of the day. So naturally, we are still seeing the bulk of the candle get printed. We are seeing a range, right? An established range. Still accumulation is happening, right? So let's say we wait for 9 o'clock, right? Let's say 9 o'clock hits. All right, we'll continue. Still a very large move up. Oh, what do we see? Okay, now we have noticed that the previous power of 3 that was in development, we already have data. This is when narrative is established. We use past data to project the future. All right, so you can see right here, -2, -2.5 is the draw on liquidity, considering that we have nothing to reference lower, right? This is our lowest point of reference from the previous 4-hour candle. Now, most of you looking at this, okay, yeah, this is bullish to start the candle, right? Let me move this over about 20 points, and I will continue to show you. So now that we know that we have established a range before 9:30, we'll play this one more candle. All right, boom. That's the 8:55 candle. So we know news was bullish, right? So continuing in that, we have a range created, right? Let me turn this off. Okay, so what's important to know is that we now have a range that we have made, right? We have made a run lower inducement and we have made a run higher. Notice we never left this low. So this is what we like to call a failure swing. So now we have a solid range, 8 o'clock open, 8 o'clock low, 8 o'clock high. Now, what we are going to do is we are going to wait for the 9 o'clock candle to then sweep that 8 o'clock high, right? We see that sweep happen right here at 9:05, all right? So this is the open. Now, while we are visualizing this 4-hour candle, we are going to look at the 1-hour candle, right? 1-hour candle open. Still pretty, 9:20 happens. So now what has happened is we are still in an area of reversal. So now you can see 8 o'clock high, right? We sweep the high. Now, what's important and what I like to use in this strategy specifically is SMT. So let's say we look at, I don't know if I'll be able to compare ES, but let's say we look at ES, right? We know that ES actually does have SMT below this 8 o'clock low. So most people, they're going to look at 8:30 and they're going to continue to long, and they're going to look for long bias. But we have already established that we want to go short in our pre-market plan. All right, so this is where narrative comes in. We sweep the 8 o'clock high, and now what we're looking for some sort of confirmation. So the next thing we'll be looking for is a sweep of the range between 9 o'clock to 9:15. In a profile where we have 8 o'clock news, we don't need 9:30 to do any more manipulation. So in that case, 9:30 will act as the distribution. See, there are different types to this model because 9:30 has many different characteristics, but this is specifically the 8:30 news profile when this model, right? So 8:30 has already created this run up as our manipulation. You can see the clear accumulation. You can see the run up as expansion. And you can also see it as manipulation. So considering 8:30 did the damage, then what will 9:30 do? If 8:30 is causing this big move up of almost 200 ticks, then we will expect 9:30 to distribute, meaning that once we have swept the range high and we have closed below it, so what we'll be looking for is a close back into the range, vice versa if bullish, obviously. So we can see our convincing close right here, and this is where I took my entry around 9:25-ish. Once I saw that on the 5-minute that we closed below here, I already had known, I'd visualized the 9 o'clock candle, right? Additionally, what you can do is you can draw your standard deviation from the open to the high, aka the wick of the candle, and you can see here that we have closed back in the range. Now what I want you to do is I want you to observe what happens when we play the clip. Now, 9:30, most people are going to be like, oh, well, why didn't it sweep this high? Because I had already told you that 8 o'clock did damage. Notice where 9:30 opened relative to 8:30. Anything above 8:30 open is considered manipulation if we're bearish, vice versa if bullish, right? Anything below, boom, boom, boom. All right. Notice how we have 9 o'clock, 9:15, 9:15 exactly. The start of it is when price starts to dump. So we already have printed the high in the 9 o'clock candle. There's phases to the delivery. So we have the open, we have the high, and we have the low right here. 10 o'clock will then continue. So that is the 8:30 news profile for this model. And you can see here, 9 o'clock open. I want you to visualize the 4-hour candle in development. So let's go back. I want you to visualize the candle. And I want you to visualize where did we close. So now what we notice is this is now an order block. This whole 8 o'clock range is now considered an order block since we have closed above it. If you go on the higher time frame, you will now notice that we have this order block printed right here and also considering here. So there's an example of the model. Essentially, it is just a checklist sweep of the range between 9 o'clock to 9:15. Now, what are some other important things we want to note within this model, right? We want to note 5. Let's think of where are we most likely to reverse from? Is it a high time frame PD array? Is it a sweep of a previous month, etc.? Is it a likely time for us to reverse? Have we generated liquidity all throughout the week, and at some point we will have an area where we will reverse? And the best way to note this, to find when we will in the weekly PO3, here's some sauce, is you take a standard deviation and you look, -2, -2.5. Essentially right here is where I would prefer you draw out your fib. or you could do it from here. Another really nice area. Boom. We tick it, top tick, -2, -2.5, retracement, right? That's just your price, right? Now this area is where price and time align. Now, we will go on to, I believe we will do Tuesday's example, because Tuesday's example was very nice. Next. So, Tuesday's example, pretty much the same kind of protocol. I don't believe we actually had news on this day. Okay, we had 10 o'clock news, so that is also important to note. Let's see. Now, looking at this profile, what can we notice? We have an Asia accumulation, so Asia generates interest on both sides. This is our daily profile, and this is also has to do with our economic calendar. Economic calendar is the first thing. We have 10 o'clock news. So what is important to note? All right, so what is important to know is we have an Asia accumulation. We have a run up during London, and then at around 5 a.m., 5 a.m. candle is when we get our reversal, right? So think of this flipped upside down, okay? I want you to visualize this flipped upside down. I will try to see if I can flip it upside down, and I will show you that what you see can be applied on an inverse correlation, okay? So imagine maybe there is some way I can flip this upside down, but if I can't, I can't. Okay, it's fine. Essentially, it doesn't matter, flipped, not flipped, whatever. We have an Asia run. What does London do? London takes out the previous day high. What do we have also generating there too? We have a range established, right? So this is a range, okay, from this high to this low. Here is equilibrium of the range, accumulation around equilibrium. We have price then tapping into a discount again inside this fair value gap. And then we have a run up, low resistance liquidity like we did on Thursday, like I just showed. Low resistance liquidity run, boom, 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 boom. 5 a.m. reversal. And then now is when we expect the power of 3 for the 6-hour candle to occur, right? So let's do this before 10 o'clock. Let's look at this at a closer scale. Go on the 5-minute. It's important to understand. So I want you to visualize the 4-hour PO3 again. We have an open, high. We have a low printed, so we have a range forming, right? First hour, so around from 6 to around 8 a.m., we have a range, right? We will dictate that range. We have a range, okay? Important to note. 8 o'clock also, we do have another range. 8 o'clock high, 8 o'clock low. A lot of action here, right? Now, the most important thing I'm looking for is a high time frame, or not even a high time frame, it doesn't even need to be, some kind of PD array that will, the narrative, okay, here's the how. The how is the PD array that it hits. The why is that it's a bearish day back to Asia lows since it was never returned to, okay, and there's no SMT there either. So you can see how ES and NQ have relatively the same low. Now, another thing to note is we have SMT at the 645 high. So that is also something that is higher confluence, but not always needed. Now let's go on the lower time frame again. What do we see again? Now this time, since 8:30 did not have any news or manipulation, news profile, and 8 o'clock had the range, here's an example of when 9:30 will sweep the range high. When we go into the 1 minute, right now, for example, and we see that at 9:30, we then sweep the range high. Also, noting the low resistance buildup, we have accumulation, manipulation, and a part of manipulation, a good thing to understand, is that look at the 9 o'clock open. Where's the wick? Where's the wick? Where is he? He's gone. He's not there. So now if we change this to the hourly, what you will now notice is this big move up, okay? And exactly when time and price meet at 9:30, injection of volatility, very important. What else do we see? Oh, SMT. We see that NQ at 9:30 creates a fat wick to the upside, clearly the most obvious form of manipulation. Now, how can we trade this, fellas? How do we trade this, right? Now what I like to do is I like to see the candles that closed up. So I like to see an order block form. Once I see on the 5 minute that we have a confirm that we are going lower, I will likely, probably, this is how I would have done it. I would have taken my entry anywhere here. I would have put my stop above here. And where would I have targeted? Where would have been a good target? Oh, what about that range that we had established that we already marked out? Oh, look, we're in a premium of that range. And look where the high is, in a premium of it. So where can it go? There's only one way for it to go, considering that we've already established the daily profile is a Asia accumulation, London manipulation into New York continuation after 5 a.m. Well, my friend, this is what we can expect. So essentially, you are looking for ranges to be formed in alignment with the daily profile, in alignment with time. So you're not taking trades before 9:30, unless you are really confident that 9:30 will distribute lower, like I said, around Thursday. And then you will also understand that 8 o'clock, the candles that precede the volatility injection are what dictates where the volatility injection actually goes. So that is also very important to note. All right. I know this is a bit of a long video, but this is something I need to touch on. You do not understand time correctly. You are blindly trading a pattern without narrative, without anything. And this could be pattern traded. It really could. So sweep of high time for PD array. And then something else to add is SMT. It's a good thing to have, but it's not going to show up all the time, right? It's not going to show up all the time. Most of the time it will, though. Most of the time it will. And that is also very important. So I'm sure I've talked about this model in past YouTube videos. I'm sure I have. But essentially, you could have just only trading this model on high impact news days, on high impact news weeks, maybe on fourth weeks of the month where we're expecting a reversal or we're expecting, our final PO3 development for the monthly candle, stuff like that. Understanding economic calendar, understanding time, understanding weekly, daily, even 4 hour. I just showed you how this all works in conjunction with each other, right? I just showed you how the daily profiles look exactly like the PO3 for the 4 hour candles or the 1 hour candles. So understanding this piece of time and understanding that 9:30, when you have this, I will show you guys the trade that I took today, posted on the Twitter as well. Now look at this. I want you to understand accumulation from 7 a.m. to 8:30. Okay? Accumulation, clear accumulation too. News at 8:30. What does it do? It creates a really big wick. A really, really big wick. Really big wick. And then you can see that is your news. 8:30 is your news. What happens after that 8:30 news? Boom, 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 run up. 9 o'clock sweeps that range and distributes post 9:30 injection of volatility. I take my entry down here, and where do I ride it to? I ride it to the 8 o'clock low, so this 8 o'clock low right here, and I ride it to the next 8 o'clock low. Now, you don't need that much on your charts looking at this. You have 7 o'clock, 8 o'clock, 9:30, 10:30. Phases of delivery are important and according to time, and that is pretty much what this video is about, even though it's long as fuck. If you guys have any questions, hit the DMs, join the Discord. We run it up pretty much every single day. And yeah, I'll catch you guys in the next one.